think I'm so smart. I was definitely 50th percentile here at Vanderbilt, no higher. I think if you just pay attention, you'll get a warning sign. Heck, when I figured out the subprime thing, I had to do it off human behavior and various sources of witchcraft wizardry.
Inflation is a very serious subject. You can argue it's the way democracies die. So it's a huge danger once you've got a populace that learns it can vote itself money. If you look at the Roman Republic, they inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it's the biggest long-run danger we have, probably, apart from nuclear war. The safe assumption for an investor is that over the next 100 years, the currency is going to zero. That's my working hypothesis.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we have Kathy Wood stating that we're already in a recession. And we've had plenty of fund managers say that we're in a recession also. Some say we're about to go into a depression. But guys, what did she state? Walmart's inventory. What I stated a week to 2 weeks ago. Letting you know, anytime you have Walmart saying that they're getting rid of inventory, the same way as Target. They're cutting back. They're only going to be given what the customers actually want because they have the data. And because we have inflation, people are spending less and they can advertise to what you actually need, not just want. And as she stated, employment insurance claims are going to be going up. Guys, we know these big layoffs are definitely coming. As the Fed shrink liquidity, we know now they're going to be doing a 15% tax on corporations, plus cutting the loopholes. What do you think that's going to happen? But what did she also say that I've been telling you? Deflation. Because she know in the fourth industrial revolution, all this automation, that's all she's invested in, is a fourth industrial revolution. Automation, robots, algorithms, drones, virtual healthcare. And then she also talks about the inverted yield curve. And guys, we know that's also a signal. The 2 and the 10 is definitely inverted. Now, we know about the last economic collapse, especially in the housing market. And we have Michael Burry stating that he used witchcraft and wizardry. And he went to Vanderbilt. And guys, we know when it comes to this collapse, it was an inside job. Like he stated, he tapped Goldman Sachs. He tapped Deutsche Bank. These credit default swaps don't work unless the big banks are involved. And we know Goldman Sachs was betting on his own paper. And we know Warren Buffett's Moody's was rating F paper A paper. It doesn't take a rocket scientist to see that the housing market was going to crash. And it definitely doesn't take a rocket scientist to see that we're going to go through a global collapse right now. If you print 20% of all money in existence in 1 year, you're headed for a collapse. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Are in the earnings season or the economic data, anything else that would make you waver in your conviction of the growth trade?
Well, what we do see in these earnings results is that we are in a recession. And we've been calling for a recession for quite some time, a lot of it based on excess inventory. So we think this is an inventory-led recession. And I think that's coming through loud and clear. We're seeing advertisers cut back dramatically. It seems like when Walmart and Target announced in May that they were loaded up with inventories, and this was far above what they had expected, and that they were going to have to do something about it. A lot of advertisers started cutting budget, saying, okay, this is a possible recession indicator. And as you know, we've just gotten 2 consecutive quarters of negative real GDP growth, but a lot of people still are fighting the notion that we're in a recession.
Yeah, certain people are fighting that notion. A lot of economists like yourself, there is a technical recession. But then there's also what a lot of folks, including Fed Chair Jay Powell, says isn't necessarily recession. They define it as a broad-based slowdown across a number of industries. Are you seeing that?
I think this is a recession. And I think what the Fed is really focused on is employment as a gauge. Employment is a lagging indicator. The CPI, the PPI, all of those are lagging indicators. If you look at initial unemployment insurance claims, they're up 50% from the low. So I do believe we're going to see some significant disappointment in the employment numbers moving ahead. And I also think, based on what we're seeing from gold, the gold price actually peaked in August of 2020. Many people don't know that. And it's down near the low end of a range, a 2-year range. That's an important inflation gauge. And then copper price. The copper price broke down. It broke a 1-year trading range in the $4 to $5 per pound range, and it has come down hard. So I think all of these are signals that that inflation is going to come down. It's going to come down significantly, and that we're probably going to see some deflation. And we've been calling for that for quite some time as well.
Right, I know you have. And how do you position your portfolio in a recession? What has changed about the way that you're looking at growth stocks?
Well, typically growth stocks will outperform as we move towards the end of a bear market and an end of a recession, because they're the new leadership. As inflation and interest rates were going up, we were facing incredible headwinds. That started in February of 21. And it looks like, at least so far, that we bottomed on an intraday basis based on our flagship strategy on May 12th. And we actually bottomed before the NASDAQ and the S&P did. The S&P broke down to new lows after that. So that was an early signal that we might be turning the corner here. But I think to really turn the corner, the Fed does need to change its spots. It's getting all kinds of signals that it should, like an inverted yield curve. And yet I think it's paying attention to lagging indicators of inflation, determined not to be blamed for letting the genie out of the bottle and causing another 70s-like inflation.
Most product of the world. Credit derivatives on an underlying asset could be worth multiple orders of magnitude more than the asset itself is worth, because all asset-backed securities, all asset-backed derivative securities settled in cash, pay as you go. That was the secret sauce of the doomsday machine. And so the crisis unfolded, with the market providing a signal far too late. Even so, Fed Chairman Ben Bernanke, Treasury Secretary Hank Paulson continued to underestimate the situation. I was just like that, apoplectic. Secretary Paulson now claims that even if he knew what was going to happen, he couldn't have done anything about it. May be true. After all, he would say, I just joined the Treasury in the summer of 2006. But he came from the top CEO job at Goldman Sachs. And once Treasury Secretary, he wasn't so impotent. He orchestrated the once unthinkable government takeovers of AIG, Fannie Mae, Freddie Mac. Absolutely unthinkable just a few years ago. The bailouts of Wall Street. He was anything but an impotent tool. And he had a running start unlike any other. But if he truly felt that way, this is an absolutely devastating commentary on how our government works. In fact, as books and articles on the crisis proliferate, it becomes clear that at nearly every failed institution and every relevant department of government, there was someone whose insight was every bit as good as mine, and in many cases better. However, none, zero were in the top job. So, seeing the economy on the verge of collapse, I did the logical thing. I sought to profit from it. Into how Wall Street really works. I called different Wall Street firms. banks with which I had prior relationships due to my trading of distressed debt. I tried to convince them to trade in this market with me. Initially, I found no takers. This was March of 2005. The whole effort was complicated because it was important to me that this security, this instrument that I'd like to use to short the market, would be standardized such that if I bought a credit default swap from one dealer counterparty, I could easily trade that credit default swap to another dealer counterparty. Bespoke, one-off contracts were full of contract and counterparty risk that I would not tolerate. Nevertheless, by May of 2005, standardized contracts were on the cusp of becoming reality. In May of 2005, May 19th of 2005, we agreed to our first trades, shorting the subprime mortgage market with Deutsche Bank. We worked on these soon-to-be standardized contracts a bit, and in the first days of June 2005, the first trades that officially went through. We would ultimately use 9 different Wall Street dealer counterparties. To be clear, well, first I'd say Lehman and Bear I avoided for obvious reasons, even back then. Goldman Sachs featured very prominently early on. They were a very anxious crew. To be clear, these credit default swaps that I'm buying would rise in value as mortgages are written off and the value of these tranches fell. Tax our population is eclipsed by the amount of our interest on our debt, basically makes us a Ponzi scheme of some sort. And I think that's the point. I think it's very hard to pick that spot. There's a long, long history. This is one of those things I think our leaders, our government are kind of in this teenage state right now. There's this long history we can rely on for a more mature view of how things work. And I think there's a long history of governments lasting a whole lot longer than they should. And, a lot that we'd rather not have happen. Certainly all the dictators seem to get it done. So I think, it's difficult to time that very precisely. I think we'll have a warning, though. I think a smart analyst, or I shouldn't say that, because I don't even think I'm so smart. I was definitely 50th percentile here at Vanderbilt, no higher. I think if you just pay attention, you'll get a warning sign. Heck, when I figured out the subprime thing, I had to do it off human behavior and various sources of witchcraft wizardry in 05. By early 06, it was apparent in the actual filings that were being made every month. And you just had to look at that, and it was really easy. And so I think you'll see that. If you're thinking, one day a treasury auction will fail, and then I'll have, I don't see that happening, because I think we have enough domestic consumers of debt, including the Fed, but including military pensions, whatever, Social Security, etc., that it's too easy for the government to hide that. And I don't know that you can wait for that.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They've seen this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.